Okay, how to make money with token metrics when the market is going down? Very, very good question. So I would say the first step is to read our newsletters. So we have Bill providing market analysis and commentary at least twice a week. So that's the first step, our newsletters. So if you enjoy hearing Bill talk, you definitely want to you'll definitely enjoy reading his work as well. Now then we also have Bill in the private chat where he's doing pretty much commentary and TA in the professional chat. So we have that as well. And then I've covered this before. So if you're very, very risk averse, let's go to Token Metrics now. So this is how I would be using it. And this depends on your time frame, but I'm assuming you're talking about trading. So if I was looking to trade and I'm using the ratings, not the indices, I would use our 3-point checklist, right? So I would find something that's ranked in the top 5, maybe top 10, but top 5. Then I'd find something that has bullish TA. And then I would find something that has bullish price prediction. And not much right now, honestly. If you just say greater than 0. Okay, sorry, hold on. Did that work? Okay, that is not working for some reason. Anyway, I have to talk to our team for that. But looking at this, pretty much it's saying stablecoins. Stablecoins, Paxos Gold. So our models are pretty bearish now for someone who's super risk averse. Now, if you can stomach the risk and you're willing to kind of buy the dip, right? Let's go to our indices, for example. So what's kind of becoming apparent at the moment, the indices that rebalance a lot, and they work very well in a bear market because they're not holding anything long term. While the indices that work the best in a bull run are the ones that don't trade a lot. So for example, during the bull months, during the bullish months we had, the price prediction indices for the monthly and even value investor in general, they're the highest. But once the market flipped on a dime, because they don't rebalance as often, they're not able to self-correct, right? So what, for example, right now in a bear market, if we go to trader, technical analysis daily, this one has fared pretty well during this downturn, for example, right? So, and it, as you see here, it has 1, 2, 3, 30% of the portfolio is in stablecoins. Actually, 4 with Tether. 40% of the portfolio is in stablecoins, right? And this one has been pretty resilient, but that's because it's not holding anything longer than a day. So I would say, how do you make money with token metrics in the downturn? I would probably switch more of your portfolio to the daily or maybe even weekly, but probably, yeah, I would say daily or weekly is what's been working, right? As opposed to the monthly. The monthly is kind of when the market is doing very, very well. Bill, anything to add to that?
Sure. So the first thing I would do is, you have to be able to play the market both ways. So if you happen to be lucky enough to be on an exchange that has, the futures contracts, or if you're in America and you've got to get the CME Bitcoin futures contract, you got to have an account first, to state the obvious. Now, when it comes to using token metrics, I'm taking a similar approach to Ian, although it's a little bit different, right? So this is the monthly weighted portfolio. Okay. So Token Metrics, an altcoin service, is essentially telling you that, sort of a token network sharing internet service a privacy coin, another privacy coin, another privacy coin, Bitcoin, Ethereum, and Binance, right? Those are not really altcoins in a traditional sense. This is a defensive portfolio. So when you look at Token Metrics, you're going to ask yourself, is Token Metrics on the offense, right? Is the AI going, okay, yeah, buy the small coins, right? Let's go. Or is it telling you to buy Monero and Dash and Bitcoin and Ethereum, right? Because compared to alts that are down 90%, these coins are practically stable coins. If everything else is down 60 to 90%.
Yeah.
Okay. The other thing I like using on this, I like this overall grade, right? Like, I don't know if I'm going to get it to come up here, but when the overall grade in say Bitcoin or Ethereum is down in like the low 80s, it's never a good idea to be super long, right? So there is such a thing in equities called defensive, right? You're either long a lot, that's when it's going up, and then you want to be in cash and then have a small portion of your part of your account that you use for trading on the downside, whether that's buying put options or shorting futures, right? But you can always tell what the Token Metrics AI is thinking by looking at what it's holding. Think of the AI. I think of the AI as a colleague. So, hey, my colleagues want stable coins and Coinbase coins. Out of all the altcoins out there, that's what my colleague wants to own. It's not exactly bullish.
All right. So hope that helps. Tell us what you think down in the comments below.